What's up, everybody? Today, I got a different style video for you guys. One thing I started doing was reading a bunch of books. I get that question a lot, like, hey, what books do you recommend? And the answer's always been like, none. I've never read any. Like, my journey when I started out was everyone's kind of stupid. Like, why would I listen to them? And I didn't exclude authors from that. Like, let me delete everything, and I'll figure out how the banks do it. The one thing I did know was like, hey, banks are profitable. Why don't I just study what they do? So like, if you guys hear me say I skip the stupid phase a lot, like that's where you think indicators work or they matter or anything like that. And all this is just my opinion. But there's one thing I kept hearing. I kept hearing about this Nicholas Darvis guy and how my trading sounds exactly like him. Because he would start, eventually how it boils down is he'll start reading the tape. He'll start looking at prices. And seeing prices, he reads a lot. And then he'll focus on that. Now, it's called a Darvis box is what he'll eventually call it to. And there's been plenty of indicators modeled after this guy, but they just don't work like any other indicator. Which is funny because it's going to look a whole lot like zones. Now, this is how I trade. Now, I've never heard of this guy. This is all just coincidence, but I find it hilarious because for the longest time, like, if you asked me to make a YouTube video, and I was like, no, because I thought I was on a lucky streak, to be honest. It's a joke now that I've been on a 10-year lucky streak, but thought that was more of a joke. And the last thing I want to do is like, what do they call it? There's a name for it, but like, was it imposter syndrome? Like, no way I'd want to say, teach or give any advice when it's like the guy trying to give advice how to win a slot machine because you just want a jackpot. Like, the last thing in the world I'd want to do. But finding out about this guy's story just gave me all the confidence in the world because he's actually from the 50s. And so the book, and actually one of my subscribers sent it to me. It's How I Made $2 Million in the Stock Market. Nicholas Darvis. Where do you even find the author? I should know my way around a book. Anyway, is it by Nicholas Darvis? So he's the author, huh? Anyway, let's rock and roll. Man, I'm going to read this. If you even just go to a bookstore, read chapter 2. It's a couple pages I'm going to read out to you guys. Because this sounds, at this point, I've helped out thousands of people, right? And this sounds like just everyone I've helped. And I got to say, so far, I've read a few books. My recommendations, so far this is going to be the only one. Because the other ones are like reading a YouTube video. Like, get to the point. Like they're just trying to put out extra words, have extra pages in the book. Like, I could sum some of these books up in a pamphlet. Like, if you're an author out there, I don't know, stop. Maybe don't do that. Or like maybe people do. Like, maybe I'm just not the normal. People like reading a bunch of nonsense. But maybe we skip to the point. There is another book, 90-Minute Millionaire, 90-Day Millionaire. I forget, but it's one I 1000% recommend. I'll even do a video just about this, broken down what makes sense to me, because the left pages, just business. Put cash in a mattress, this much a day, you'll have this much. Put that in a bond. Left pages are just business. Right pages are the story. You can go through and read just the right pages and get the story. You can go through just the left and get just the facts. Man, how come every book isn't worded that way? Like, here's the story, here's the BS, here's the facts, here's the highlights. Best book. Anyway, so let me get on to this real quick, because there's a couple lines that just stand out. So anyway, Nicholas Darvis, chapter 1, it's how he gets introduced to the markets. Someone offers to pay him, but like, hey, I'll give you stock instead of payment for a job. So he takes that and it goes up, right? Gets him intrigued. He's interested in it now. So he thinks he's got this thing figured out. And so he's going to jump in. He finally gets a brokerage account and he's going to start trading. He shows a couple of his trades. It's Columbia Pictures. He bought at 20, sold at 22.78, profit $463.42, so $463.42. North American Aviation, he buys it at 24.25, sells at 26.78, profit $405. Kimberly Clark buys at 53.5, sells at 59, profit $464 for net profit, total profit of $1,300, right? So he gives the numbers in here. He says, each of these transactions netted me just over $400. It was not a large sum, but 3 profits in a row amounting to $1,300 in just a few weeks made me feel that these were smooth, simple operations and I was in control. That spells out everyone I've ever seen in a YouTube comment. Most of you guys just started trading in 2020, like after one of the most ridiculous crashes we've ever seen, the closest thing to a flash crash in a while. 2020, we just dropped, and then we ripped it. All you had to do was participate in the markets, and you were profitable. Most people think they know what they're doing, and it's not even with ill intent, but there's so many YouTube gurus out there that don't have the slightest clue how anything works. They were profitable in 2020. They're making YouTube videos sharing their success. So it's not that they're wrong or trying to scam you or harm you. They have no idea how things actually work, which is a whole different problem in itself. It's where you get to the scenario of the blind leading the blind. And man, if that's not worded perfectly, you feel you're in control. This leads to problems later that I do talk about, because people are like, you play market maker. It's red, so you double down. You're going to show the market who's boss. And then you find out, and so in most scenarios, you find out who's really the boss, and you get screwed. He says, the feeling that I was operating with a profit in Wall Street, allied to a natural awe of the place, made me feel foolishly happy. I felt I was losing my Canadian amateur status. So from Canada, that's what he was trading in the beginning. Now he's in an American brokerage. I felt like I was losing my Canadian amateur status and becoming a member of an inner circle. I operate on Wall Street. I know so many people that talk like that too. I did not realize my method had not improved, that I was simply using more pompous words to cover it. For instance, I no longer considered the broker's advice as tips, but as information. As far as I was concerned, I had given up listening to tips and instead was receiving authentic news based on valid economic evidence. Just following the news. The boat sailed happily along. Here are some of my transactions during April and May of '54. So he buys National Container, bought at 11, sold at 12 3/8. Tricontinental Warrants, bought at 5 1/8, sold at 6. Allied Chalmers, I don't know, bought at 50, sold at 54. General Dynamics, 43, sold at 47. Universal Pictures, bought at 19, sold at 22. Okay, profits, profits, profits. My confidence was at its height. Man, does this sound like you guys yet? I couldn't wait to read this to you guys. This was clearly not Canada. Here, everything I touched turned to gold. This is definitely 2020 for most of you guys. By the end of May, my 10,000 had grown to 14.6. Occasionally, setbacks did not bother me. I regarded them as slight, inevitable delays in the upward climb towards prosperity. Besides, whatever a trade was successful, I praised myself. When I lost, I blamed it on the broker. You guys are all human, and you guys all sound the same. Not speaking third person. It's just that I have my own group. I have my own chat. I see these same things being said every day. Like this is crazy how much this is. Nothing's changed. This is from the 1950s. Man. All right, so here's a couple more. Now he buys, sells, profit of 41, buys, sells, profit of 37, takes a couple losses, 59 and 17. So his total profit was $79. His total loss was 77. Let me get to the next. So he thinks, here's where he gets into the trap of the more I know, the better I'll do. So I'll sum this next couple pages up for you. He starts reading books, ABC of Investing, the stock market, the securities market, and how it works. Your investments, profit in the stock market, consistent profits in the stock market. You can make money in the stock market. So he starts studying all these books, right? Let me get to the most important part. If you've been following me for a while, you are about to you're going to recognize this next part because I make fun of it a lot. It's not something I've ever said. It's not something I care to say. And just know that if I didn't laugh in your face when you told this to me, it was just out of respect to you. I didn't want to get down an argument. And there's other YouTubers that say this. And even when I was in their group, I did laugh at this saying. So it's no secret. I was helping out Ricky in LPP. He used to say this all the time. And there's a saying Ricky actually took from me. It never made any sense to him, which I found funny, but he even made it on a shirt. I even bought this shirt because I would say trade less, profit more. Okay, now what Ricky would say is, you cannot go broke taking a profit. And it's funny because it's in this book. He says, about this time I heard a saying which has been passed from mouth to mouth for generations in Wall Street, but to me it was new. You cannot go broke taking a profit. I was much impressed by this, and I was burning to put it into operation. This is how I did it. One of the market leaders in February '55 was Kaiser Aluminum on my broker's recommendation. I bought 100 shares at 63, paying $6,300 for it for the stock. It went up steadily, and at 75 I sold it, receiving $7,400, which gave me a profit of just shy of $1,100 in less than 1 month. Hoping for another quick profit, I switched into 100 Boeing at 83. It immediately began to drop. 4 days later, I sold it at 79, collecting $7,900 in return. My loss on Boeing for that transaction was $400. Trying to make up for the loss, I then bought Magma Copper in the first week of April. It was selling at 89. I paid $9 grand for it. No sooner did I buy it started to drop. 2 weeks later, I sold it, and for 80, collecting $8 grand. This gave me a loss of $1,000. By this time, Kaiser Aluminum, which I had jumped out of the first week in March, had moved up to 82, and an advisory service was recommending it. So part of the other chapter was he started just subscribing to everything. That if there was a trial, he'd buy the trial, and he'd start taking their advice. I switched back into it, buying 100 shares at this price, paid $8,200. 5 minutes later, it started to slide. So it goes up. Remember, Kaiser Aluminum, he bought at 63. This is the first one he bought, made a profit. Took a whole bunch of losses. Now this other place is recommending it to him. Now that it's at $80. 82. The advisor service was recommending it. So he switched back into it, buying 100 shares at this price, paying $8,200. 5 minutes later, it started to slide. Not wanting to risk a further loss, I sold it at 81, receiving $8,100. This meant that for 5 minutes of trading, I lost $115, including commissions. On that first Kaiser deal, I'd made a profit of $10.74. The losses sustained by jumping in and out of stocks were $1,500. So the whole circular transaction, which began with Kaiser and ended with Kaiser, gave me a net loss of $461. If I had stuck with Kaiser, my original purchase at 63, until my ultimate sale at 81, I would have a profit of $1,700 instead of a loss of $461. Here's another case. And he just goes into it. So he buys, I just skipped ahead. I'm trying to summarize this for you. Rayonier. He buys it at 53, sells at 58. Buys again at 63, sells at 51. Buys at 72, sells at 74. All of them profits. All of them rocking and rolling. All the same ticker he bought at 53 and sells. Could have bought at 53 and sold at 74. So the profit I made on these series of trades amounted to $1,200. Then the old loss pattern repeated itself. In April, I switched to Manatee. Guys, I'm not a reader. But I bought 1,000 shares, paying $8,500. Immediately afterward, it started a downward slide. I sold out of my varying, receiving a total of $7,400 with a loss total of $1,000. This left me with a net profit of $195. So Rayonier that he bought, all his transactions totaled to $1,200. Receives a loss on the other one. So his net profit right now is sitting at $195 because he couldn't go broke locking in a profit. But then he bag holds. He takes a loss, regardless of bag holding or not. However, if I held my original November purchase of Rayonier without constantly trying to take a profit and sold in April at 80, I would have a profit of $2,600 instead of $195. And then, so I'll leave it there. He just goes into what did all this mean. I did not appreciate it at the time, but it was a classic refutation of you cannot go broke taking a profit. Of course you can. And that's exactly what I say all the time. Like, yeah, you can't go broke locking in a profit. And then what are you going to lock in $12, bag hold something for $300? That's the stupidest saying out there. I've been saying that my whole YouTube career. He's been saying that since the 50s. It just doesn't make sense when your profits don't add up. And it's why, like, and I don't want to talk bad on anybody that does things different than me. Right? There's a few ways to skin this cat. There's a few million ways to do it wrong, though, and just piss money away. But the thing that makes most sense to me is why I say it, because if anyone else's way made sense, I would just be talking about that. I would be doing that. I would be employing that. But this is why when I get in, I just trail it. And what's funny is I literally just went through this personally with myself. As much as I tout trailing, don't get in and out. Don't play the in and out game. I jump in the futures world, and because futures contracts, they're leveraged, right? So like options contracts, you get in cheap, and if you're correct, they spool up like a turbo, right? Because you got Greeks, everything working for you. They hit the nitrous, they rock and roll. But then you have futures contracts like a supercharger. They keep that leverage, they keep that power. It's very consistent, very steady. So when things get crazy, plus you can manage them around the clock, when things get crazy, I like to jump into the futures world. But that's because I keep that leverage, I get to manage it around the clock. Like, it's just really cool to play the in and out game. It's so easy. A lot of my group has jumped into futures just for the simple fact that there's no PDT on there either. You don't need 25 grand in your account. You don't even need 5 grand in your account to have a futures account. I know a lot of gamblers will go into futures just for that, because you can do it very cheaply. You get the leveraged aspect. You can play the in and out game. But I fell right into that trap. I was doing it. And if you look at these yellow zones behind me, those are huge in the futures world. I used to say that a lot, actually. There's even a guy in my chat, he still says that. He's like, he laughs at my zones because they're so big. And in futures, I can get that. Because, you know, like, more money means more losses. Like, there's never two sides to that coin. There will never be one scale tilted without the other one going the other way. But it wasn't until the CPI report. CPI report came out, it happened to jump up, touch one of my zones. So I went short. And that was the classic volleyball case too. We spike it up, news comes out, tanks it. But what I decided to do, and I told my mentorship group that the night before, I'm doing all of this, and it panned out to the T. I said, I'm going to go ahead and go short. I'm going to be short IWM. It was after a nice leg run up, or a nice run up. It was the Russell futures. So I call it IWM. I'm talking about the futures, not the ETF. It's like M2K is the micro. Anyway, I grab this, I go short, CPI comes out, what a shock, we tank. But instead of trailing it and just locking in that profit, I go ahead and hold. I end up holding this for a few days. Now remember, that zone's like 30 points wide. And so, now, don't get me wrong, you can make a living trading off 30 points wide. You know, and this other guy in my chat, he's a friend of mine, he's a good friend. Right now I'm trying to get him to see the light, because he's scalping. Now he's doing a good job. It's scalping, it's pennies. It goes back to what I was saying in the beginning, like, why trade for pennies when you can make dollars? It kind of goes back into the swing trading. The markets haven't been you know, that friendly as far as swing trading goes. But what I did was back to my original roots, was I put my stop in and I gave it the appropriate wiggle room. And now it went all the way down. I even joked, like, I know we're going to turn here. Should I go ahead and lock it in? And I blame another guy in my chat, Matt, because he said, no, stick to your plan. And I did. I was looking for an excuse to change my plan, which oftentimes does not pan out. But I kept my stop above a zone. We went zone to zone, a speed bump zone to zone, and then it tagged out. So I could have made quite a bit more had I just put it up nice and tight. Largely, in the grand scheme of things, that would have only just panned out in that one particular trade overall. That's why I kept the plan, thinking logically, was I kept my stop above that zone. After it tagged out, it was still over 200 points. You think 30 points is big? Try making 200 points in a couple of days. And then after that, the next CPI report. We had PPI, we had CPI. The market's going nuts. There was a Thursday that I just warned everybody about because a huge short just got out of the market. Anyway, it's actually this trade right here. So CPI sends it down. I actually bought right here in the futures world, and it shoots up. But instead of just locking it in, I just trailed it and I gave it the proper wiggle room. Over 200 points on that trade. And then we sell off the next day. Even after I just warned everybody we're going down. Intraday, we break a support, so I go short. Same scenario, not 200 points, just shy, 80. You know, like, I used to go 15 to 30 points was a banging trade. Like, yeah, you can make 100 of those a day. Sitting back and relaxing, just sitting back to the roots of, you can't go broke locking in a profit. How about you let them decide? Trail it. When you're on the gain train, just stay on it. Breathe, relax, take a Xanax. I'm not a doctor or a financial advisor, so don't listen to either of that. But pump the brakes. Put your feet up on the desk. Hang out. You know, I've been saying this a lot, and it was just funny that it even happened to me. Because it just doesn't matter your level. I don't know. Just relax. Give it the proper wiggle room. Let them decide. Put your stop in the green and hang out. Management is only in the green. You put the trade on. You roll the dice. Gamble, invest, whatever you want to call. You're active. You're in there. There's two scenarios. One, it goes down, you tag out, you take the loss, you're out. That's scenario one. You see how clean that was? Entry, exit, period. No gymnastics, no nothing. Like, what if it goes down to here? What if I do this? What if I add on, double down? What if I bag hold? What if I just sell covered calls? None of that. Zero. Entry, exit, clean. And then there's management. You bought in. It's green. Now what do? How do I maximize my profits? How do I not guess the top? Every YouTuber out there that tells you you can't go broke locking in profits also tells you don't try to catch the bottom. Don't try to time the bottom. Yet here they are trying to time the top when it matters the most. Get out of here. Your brains are on backwards. Time to flip that switch and do what makes sense, right? Management comes when you're green. I'm here, I'm in, I'm on the gain train. How far do I want to take this? I want to take this as far as it can go. I want to buy it now. I want to put my stop in the green. I want to give it the proper wiggle room. Amazon, a $3,500 stock before it splits. Does it make sense to put your stop 25 cents away from the current price? No, you're tagging out every time. You can play super scalper all day long. You're just going to tag out. There's ways to look at it like your average true range or daily range, but it's nothing for Amazon to move 25 bucks. So if you put your stop in there, unless you're kind of got luck on your side, you're probably going to tag out. Giving it the proper wiggle room it's a little bit of science in there. Dial that in, and you'll smoke every one of these YouTubers saying you can't go broke locking in profits. Because once you manage your losses and learn how to manage real winners, then you become a real winner. Like right now, you guys think, oh man, that one loss knocked out all my month's worth of gains. When you switch gears, it's that one winner knocked out every one of those times I just got in and tagged out. I thought that was the bottom, didn't pan out, so I got out. Like Peloton, it went from $180 to $8. How many people tried to buy that on the way down? How many people bought it and bag held? There's a huge difference, because the person that bought at $150 and it's now $8, he's hating life right now. At this point, he's like, well, I just hope it turns around and gets any kind of money back. The person that tried 15 times, got in, stopped out, got in, stopped out, took way much less, right? Or he finally just learned his lesson and quit doing it. Maybe even short the stock. Anyway, I want to wrap it up here. I just thought that was a crazy lesson. I want to read it out to you guys. As I read books, if I find a good one, I'll let you know. That one, maybe I just think it's good because he aligns with what I think. Maybe I'm biased. But now you have two people telling you that that's the craziest thing they've heard in their life. Or, did anything I say just make sense? Did it click to you? Or you want to just keep locking in $3 while bag holding $300? Anyway, let me know in the comments down below. What do you think of that book? Are you going to go read it? Right now, I advise it. Anyway, I'll wrap it up here. I'll see you guys in the next video.